Will 2020 be the year of the dollar collapse? On New Year's, everyone was posting that 2020 be their year, many of us excited about our prospects for the new decade. Looking back at those posts feels like they're from a different reality or an alternate universe. With a newfound concept for the hashtag hindsight is 2020, what will we be saying this year or next? The US and much of the Western world is on its heels. The COVID-19 pandemic has caused the private sector, public companies and state governments to stem the spread by any means necessary. Social distancing measures, quarantine orders, masks, mass layoffs, and furloughs were all foreign concepts to us last year, and we are still nowhere near seeing the proverbial light at the end of the tunnel. Despite sour economic data constantly reported in the media, many Americans subscribe to the idea that the US government and its financial policies are resilient, with a supernatural ability to overcome anything. Our comebacks in the 20th century support this. World War II, September 11th, and through the 2008 global financial crisis, the US dollar and economy survived. Times have changed. What-if scenarios are tossed around often, and the alarms about the dollar are sounding off. Stephen Roach, Yale professor and former Morgan Stanley Asia chairman, forecasts a 35% drop of the dollar versus other top currencies. Currency crises do happen. Currently, Lebanon is experiencing a woeful collapse as its tourism-dependent service economy has taken a hit during the COVID-19 pandemic, and now with unrest from the Beirut explosion. The Lebanese lira value has plummeted, raising prices on basic goods and services as the Middle Eastern nation citizens can't find work and banks are restricting which currency to shell out. Let's break down why the US dollar has had the distinction of being the world's imminent currency, why other nations may be moved to sell their dollar reserves, and how international trade activities over the past decade may give leverage over the dollar and the global economy. What makes the US dollar special? Currency collapses generally happen whenever the masses lose faith in their money, collectively starting to believe that it has no stored or exchange value. Currency fluctuate domestically and internationally for all nations. But the dollar was agreed to serve as the world's benchmark fiat money at the Bretton Woods Agreement in 1944. The world's most powerful governments and their central banks have pegged to the US dollar to secure their own money. The US dollar may indeed enjoy special status because of Bretton Woods, although the International Monetary Fund was established by the global powers to essentially keep an eye on the Federal Reserve and how it upholds its policies. As the dollar hasn't been backed by gold reserves since 1971, it is backed by the productivity of the US economy. The countries that comprise the European Union are active in trade with each other, as well as with China and Russia, which are also actively engaged in business with each other, particularly in oil, real estate, and import and export in the Middle East and Africa. For major countries that conduct more volume business globally, there's a higher probability that their currency will remain stable. Factors that can cause the dollar decline. Whether the dollar could or will be dislodged as the premier fiat is in and of itself highly speculative, because the US dollar's value is so closely tied to the state of our economy, and not the commodity-based standard we did away with in the 70s. How it rebounds is being closely watched by Japan, Russia, China, and the European powers. If foreign governments or investors collectively decide that the US dollar is not credible, a scenario could emerge where short positions would all but decimate asset valued in dollars. In many ways, this logic is parallel to dysfunction of adjustable rate mortgages, ARMs, the default on which could cause the domino effect that became the cause of the last global financial crisis. What do I recommend? Hedge against the worst-case scenario. Although Stephen Roach's forecast is bleak, we don't have the benefit of hindsight or clairvoyance. It is possible that a recession or high inflation may impact the dollar, but not collapse it by 35% and lead to a complete revolt, as he would have us believe. We also don't know whether the nations doing business with Russia, China, and the US will see the yuan or the yen as having more value. The idea that a collapse of the dollar is imminent may be nothing more than a display of paranoia from wary investors. Though, as Andrew Grove says, only the paranoid survive. If spot prices of gold and silver are any indicators, it may be time to really sit down and think what could happen and how to embrace the change.